All right, good afternoon, everyone. This is Joe Bacella here at Chaikin Analytics, and I'd like to welcome you to Investing 101, how to find winning stocks in 5 simple steps. Our presenter today is Sandy Chaikin, co-founder of Chaikin Analytics. Be sure to submit your questions using the Zoom Q&A window, which is available in the upper left-hand corner of your screen. We'll be available throughout the presentation to respond to your questions. As a reminder, this webinar is being recorded and a copy will be sent to everyone who is registered. Throughout the presentation, please be sure to follow along using Sandy's Investor Workbook. A link to the workbook is currently available in the chat window. Now, with no prior experience, Sandy started investing in 2012 with Chaikin Analytics and built a killer portfolio that outperforms the S&P 500 and most money managers. Sandy presents at NASDAQ and industry conferences on fearless investing. Now, to get us started, we are joined by Mark Chaikin to provide us with an update on the market. Mark, take it away.
Thank you, Joe, and welcome everybody. Sandy's webinar today is going to show you how to pick stocks and stresses the importance of having a plan and then using a tool like Chaikin Analytics to implement that plan. What I'd like to do, because we've experienced so much volatility in the markets, is to give you a bit of an overview so that what Sandy is going to be showing you can be put to work with some sort of confidence, because if you've been watching the news or looking at CNBC, you've seen some really scare headlines. So let's start with what we know. We were in an earnings-driven bull market that was on autopilot through all of 2017 into 2018. Now we're getting a normal pullback, but it feels like a runaway roller coaster because of all the volatility. So volatility has returned to the market. The fact that we were expecting volatility to come back in 2018 and alerting our members that a 5 to 10% correction would happen at some point doesn't make it any easier to live with it if you're an investor or if you're looking to put money to work. So we're in the midst of a normal pullback, in our opinion. A very specialized trading vehicle that the hedge funds use to put on positions based on low volatility in the market blew up after the close yesterday and spooked the market. You had commentators on CNBC like Jim Cramer, all the anchors on CNBC talking about this in a special edition at 7 o'clock last night after Mad Money. So again, let's look at what we know. The fundamentals for the market remain strong. We're in a much more volatile market climate. Joe, can you switch to the S&P screen, please? Thank you. And let's review what's happened here in the last week or so. Interest rates started to move up. The market started speculating about inflation. There's no sign that inflation is any more of a problem today than it was on Thursday's close before the very strong jobs report on Friday, which showed that wages are going up. This is normally bullish for the market. It means the economy is doing well. So the fundamental picture remains strong. Fourth quarter earnings that are coming out every day now are beating expectations, as are revenue. Companies are guiding higher for the first quarter of 2018. So the fundamental picture remains strong. What's happened is that the technical picture has broken down. So let's review a little of that. You looking on your screen at a one-year chart of the SPY. It's the most actively traded instrument. It mirrors the S&P 500 large cap index. And you can see that we've had a waterfall decline. And then in the little white box, you see what happened today. So as the market came down, it started breaking support levels, the 21-day average, the 50-day average. And then we had this panic selling that was triggered by this blow up in an instrument that the public actually never trades. This is used by the hedge funds. So yesterday, the market stopped at its 100-day average. We hadn't revisited that for almost a year. What you don't see on this chart is the fact that in the overnight trading session, where the S&P stock index futures trade on a 24-hour basis, just before midnight, the S&P 500 futures contract traded down to the very closely watched 200-day average price. That price was at 25.34. It actually got down to 25.29. And then it staged this huge reversal. It reversed 6%. So even though we opened lower, as you can see on that little white insert, and finished higher, we completed the equivalent of a 10% drop, but a lot of it was in the middle of the night. It still counts because people trade all around the globe. So we're in a normal correction in our view. We've now rallied back up as of this afternoon's high and retraced 50% of the correction. We went from 28.73 all the way down to 25.29, and then we rallied back to 2,700 and finished the day up almost 2%. So what does this mean for investors? Because earnings are so strong, you want to look for opportunities. You've got to view, in our opinion, this panic selling as an opportunity to buy stocks at a discount. There were bargain basement prices on the opening today. For our members, we put out interim market update before the opening today saying there's an opportunity to put cash to work on the opening. We recommended putting about a third of the cash to work in stocks with bullish power gauge ratings, and Sandy is going to show you how you find them, what they mean, and why these are the places to invest your money. So with that, and with complete confidence that you're going to learn an awful lot today, and now having given you a context for why you should be looking for stocks to buy, I'd like to turn the webinar over to Sandy Chaikin.
Here. So Mark, that's a great overview, and I think that really frames the conversation for what we're going to be talking about today. Is more or less our benchmark. Statistic here, it's grown in average. Oh no, wait.
Everyone, just bear with us for one moment. We're going to go ahead and just sort out technical issue real quick.
Okay, am I back?
Sandy, I think we might actually, yes, yeah, we can hear you.
Okay, great. Sorry about that. All right, thank you, Joe. All right, so what I was saying is that the S&P is what we tend to measure ourselves against as individual investors. And the S&P has grown an average of 10% over the last 20 years, yet individuals have only averaged 2.5%. And that's because people buy on emotion, not fact. And this, I felt this was very pertinent for today's environment where there is so much emotion out there and fear of what's coming and fear of losing money. So it's really important, as Mark said, to have a plan and to know what you're going to do in an environment like this. And today's webinar is all about giving you that plan. Joe has given you a link to a workbook, which lays out the 5 steps we're going to be going over today. You can take notes in it, download it, take some notes in it, get some stock ideas. But as Mark said, today's environment is a great buying opportunity. I think of these stocks as being on sale. And so it's really important to have a plan in place and make your short list of stocks to buy so that as they dip, which they're bound to do a few more times this week, you know, you can get in there and get some great stocks on sale. So why is it important to actively find these stocks and invest in individual stocks as opposed to ETFs or mutual funds? Well, the statistics show that 81% of actively managed mutual funds underperform the S&P, and this has been consistent over year after year. So putting your money into a mutual fund doesn't really seem to be a great idea. You've got a high fee typically and underperformance. So that doesn't seem like a good option. You know, the option that we steer our members into is to buy individual stocks. And as you can see from here, from the 2017 performance of these stocks, you can outperform the market. I mean, the market was strong last year at 20%, but these stocks were even stronger, you know, going from like 50 to 77%. And these are just some of the stocks that I own. I typically own 10 to 15 at any given time. These stocks I've all owned or currently still do own. And what I'm going to be showing you today are examples from my own portfolio and how I invest and how I'm navigating these last couple of days as well. So you're going to discover 5 steps to find winning stocks quickly and easily. I mean, none of us have time, right? So things have to be done very efficiently and quickly. And this is the type of stock you want to be looking for. This is Columbia. It's an apparel stock. It's a stock I own. And you can just tell by the upward swing here of the price chart that this is a great stock to own, even today. You know, it was up today. So, you know, there are good stocks out there to be had. It's just a question of how do you find them, and that's what we'll be going through today. And the point of all this is so you can generate revenue, make some money, and celebrate. In addition to putting some money into your 401k plan and saving it for retirement, you do want to have some fun along the way. Just a point going back to why it's important to stay invested. I heard Bill Miller on CNBC Monday morning, and he was saying he's one of the most respected fund managers of all time. And he was saying that there's a risk in being underinvested. You know, the risk is not the 500-point drop in the Dow, it's being underinvested. And he was followed by Blackstone chief operating officer who said we're in a retirement crisis. He says the average American has only $15,000 saved. So, you know, these are real concerns that we as investors face. But we can do something about them. You know, we can have a plan, we can execute on the plan, and we can generate revenue and put some money into our retirement because who can live on $15,000, right? But also have enough funds so that you can celebrate along the way and have some fun. So Mark and I have taken some great trips on the profits that I've been making. We've gone to Turkey, we've gone out to Vail, Colorado, we've gone to Rome, going to Florence in Italy in May. So these are all on the profits of the stocks that I'm going to show you how I invested in them. All right, so as Joe said, I didn't start investing until 2012 when we started this company. But since I've been investing in these individual stocks, I've beaten the S&P 500 each year, and thus, as the stats show, 4 out of 5 pros underperform the S&P. Thereby, you know, by correlation, I've been outperforming 4 out of 5 pros. So you can do this. I mean, the whole point of today's session is to give you the confidence so you can do this on your own and say, I can do this. I mean, if I can do this, so can you. Because believe me, when I started investing, I had no prior experience of investing in stocks. So I first started by going into stocks that I had heard of, like eBay, Yahoo, Southwest Air. And then those all worked out really well. We took some great trips just on the profits from that Southwest Air alone. We went to Turkey for over 2 weeks and had some money left over. But then I got into, in 2016, what I call the triple digit winners. And these were a lot of the small cap stocks, stocks you've never heard of, stocks I'd never heard of, Centa, Quad Graphics, NACO. I mean, they were all up over 100%, as you can see, but who's ever heard of them? Well, you know, it's not that hard to find them. 2017, last year, I was in Apollo, Lam Research, and D.R. Horton, building supply company. And some of these stocks I'm still in. I'm still in APO. And I do this on 10 to 15 minutes a day. So we're going to look at the stocks that I'm in today, and I have a very short list for you too of kind of bonus stocks of my short list of stocks that I'm watching and waiting for the opportune point to get in. But after the 2009, 2008-09 meltdown, where I had turned my 401k plan over to a wealth manager and lost 40% of it, I took it out of the care of the wealth manager and felt that even without prior experience, I was going to have to figure this out, how to invest in stocks and take control of my financial future. Because as I say, every time I give a presentation, there is nobody who cares more about your money than you. So it's important to take control, and I did that. I took it out of his care. I put it into a Vanguard S&P 500 account, and then started trading stocks once we found his Chaikin Analytics, and I had the proper tools that I could basically teach myself how to do this. But it's important to gain that confidence. And I always say you have to build the confidence first before you're going to be a good investor, because if you're not confident about your decisions, you're not going to make good decisions if you make any decisions at all. So confidence is key. And that's what the 5 steps today are all about, to give you the confidence and the roadmap so that you can take control of your own financial future. So let me pause here for a minute. There's a lot of challenges going on, particularly since Friday in the marketplace. Let me pause for a minute. And Joe, do you have that poll we use of the biggest challenges facing investors that we could just put up?
We, given our conversation prior, we
don't have that. Okay,
yeah.
That's all right. Let's the ones that we typically find are the most common kind of check marks when we list them. I'll go over, but here's some of the ones that we typically hear as people's challenges: lack of education, we let the emotions get in the way, information overload, timing, that's always a big one, lack of tools, poor stock picking, lack of confidence, fear, uncertainty in the market, etc. So these are the ones that we typically find to be the biggest concerns. You know, the timing, when to get in and when to get out. And I think that's probably the top concern on everyone's mind today. When do I pull the trigger? Should I get out of this stock now that I see it's down 10% or whatever? That's, you know, that's people's biggest concern. And we're going to spend some time on that. Fear, you know, that's always a big one too. And emotion, you know, the emotions get in our way. And that's why individual investors have a much poorer performance record than the S&P 500. And information overload. I think we're also inundated with information, particularly financial information. There's so much out there, 24/7 news cycles, emails, texts, Instagrams. It's really, I find it very difficult to kind of keep my head above water on the email front. So there's just an awful lot of information out there, and you really don't know who to believe because you do hear conflicting reports. So what we're going to do is go through the 5 steps of how you find winning stocks and how do you avoid those losers. You know, by focusing on tools. You've got to have good tools before you can put them to work. You've got to have confidence in those tools. You got to know what to buy, have criteria for what we call a classic bull. You want to buy strong stocks in strong industry groups. And timing, you know, when do I get in? When do I get out? And how do I avoid those pitfalls, those bearish stocks that can really destroy my portfolio performance? So the examples I'm sharing with you today are all done on our platform, which we call the Financial Freedom Fast Track platform, powered by Chaikin Analytics. It's on desktop. Those are the slides I'm going to be showing you today, but it's also available on iPad as well. So let's start with tools that you can trust. the tools that we trust are based on the Chaikin Power Gauge stock rating. It's a very simple gauge, as you can see here. And what this rating does is it looks at the potential of a stock to out or underperform the market over the next 3 to 6 months. So you can see it's pretty simple here, but it's far from simplistic. And this is the stock rating model that my husband Mark created after the 2009 meltdown, when he could see there were literally millions of people like me who had become discouraged with Wall Street, taken our money out of traditional brokerage firms and set up self-managed accounts. But he also knew that we didn't know what we were doing, that we didn't have the knowledge, the know-how, the education to manage our portfolio properly. So what he said is, well, I'm going to take all of my years experience, my 40-some years experience on Wall Street, come out of retirement. He had sold his company to a division of Reuters, retired for 10 years, but he said, I'm going to come out of retirement and utilize my knowledge to create tools for individual investors that have the strength of the ones that I've created for professionals all these years, but they're simple enough and easy enough to use that an individual like you, Sandy, could utilize them and depend on them. And that's exactly what we did, and that is the foundation of the company, Chaikin Analytics, which we started in 2009, and the Power Gauge rating came out, I think it was like a year later. So as I said, it's a simple rating, goes from very bullish to very bearish, but it cuts through all this information overload that you see on the right. It takes all the data that professional investors look at every day, but it takes that, analyzes them, put it into an algorithm, and actually comes out with a rating. So rather than give you new data that you then have to make sense of, it's giving you a rating. It's like I call it a GPS for stocks. It tells you where the stock is headed. It's like your roadmap. So by cutting through that clutter, you can get to a rating very, very quickly and easily and have confidence of where a stock is headed. Now, the rating is used and the analytics are used by a number of our partners, John Carter being one of them. And I know there are many of John Carter's followers on this presentation today, which is great. But John uses it, and he likes that it includes 20 technical and fundamental factors to anticipate a stock's profit potential. He calls it an objective awesome meter for stocks. And he uses it in his daily research. So what are those 20 factors? Well, here are the 20 factors. The model is 85% fundamental, 15% technical. After testing some 200 and some factors over a period of over a year, Mark identified the 20 most significant factors that affect a stock's price. And these are the same 20 factors that you see listed here under these 4 components that a professional will look at every day when he or she is evaluating a stock. So instead of going to multiple resources looking up what your debt to equity ratio is, what your return on equity ratio, if you know what those mean or how to read the data, this takes that data and rolls it into the rating. Now, as you can see by the AMAT rating on the left, you get a power gauge rating on each of those 4 components. You can also drill down on any of these 20 factors and get a reading on each of those. Now, for instance, in earnings season, which we're in right now, I drilled down on the earnings component, and I pay particularly attention to this earning surprise factor right here. But I can, just by clicking on my mouse on the platform, I can get this drop-down menu to get a rating on each of these 20 factors. And that really sets me up for earnings season. But other than that, I tend to look at the overall rating. There's 2 other factors that I tend to look at before I pull the trigger, and that is under the expert component. This is kind of our secret sauce. Short interest and insider activity. These are really important because the short sellers are considered the smartest traders on Wall Street. and they'll only short a stock or actually sell it before they own it, anticipating the stock's going down. So if they're shorting a stock, I want to know about that, because that's not one I want to be buying for a longer view. And if they're not shorting it, it's bullish. So just remember, bullish green is good, red is bad. Insider activity, on the other hand, is also very valuable to me, because who knows better than an insider what's going on with a company? These are typical key management members. They know what's going on with a company, and this measures insider buying. They're only going to be buying for one reason, and that's because they think a stock is going to go up. So I look at short interest, I look at insider activity, and during earnings season, I look at earnings surprise. Other than that, I really look at just the 4 components, as you can see on the left, and the overall rating, of course. And for me to consider buying a stock, it has to be at least bullish, preferably very bullish. So what's the point of depending on models? Well, this very well-known analyst says models beat human forecasters because they reliably and consistently apply the same criteria time after time, as opposed to human beings who are swayed by emotions and opinions. We have emotions for human beings, and the experts we listen to on CNBC and elsewhere have their own opinions, and they interject those into the data and the reporting that they give to us. So it's really important that we have our own independent research, and that's what the Chaikin Power Gauge can give you. So to give you a little bit of confidence, more than on my say-so, that it's a great tool, we have partnered with NASDAQ to create indices that overlaid the Power Gauge rating on 3 of their indices, the small cap, the large cap, and the Dividend Achiever Fund. And after 3 years of live in the market testing, not testing, but they were live, New York Life's Mainstay Investments approached us and said they would like to license these ETFs and offer them to their money managers and clients, who can now invest in a portfolio of stocks based on the Chaikin Power Gauge. So there are now ETFs in the marketplace powered by the Power Gauge trading. In addition, we are used by many of the pros, the hedge fund managers like Soros and Paulson, who Mark sold his previous workstations to, now use our Chaikin Power Gauge rating and analytics. And the media writes about Chaikin Analytics frequently. Mark is quoted pretty much weekly on CNBC.com. Last week, he and Jim Craner had a one-on-one kind of a stock debate about what they felt were the best picks for 2018, and it was presented live on this studio in New York for this of thestreet.com. It's now the video is up on our website, chaikinanalytics.com, and I urge you to go see it. It's a really powerful review of how Mark thinks, how the analytics works, and how you can integrate it into your trading and investing style, as Jim Cramer has done as well. And speaking of Jim Cramer, he says the model, as you can see here, is the best. He used it at his old hedge fund. So many of the pros are using the model as well. All right, so let's get into what to buy. This is kind of your checklist, and this is in the workbook as well. But when you're making your shopping list of stocks to buy, this is what you want to look for. And we'll go through these on several examples. So before I get to the examples, though, I want to show you a chart that really kind of charts how a stock price moves. This was created by Dr. Wyckoff almost 100 years ago. He taught investments in the stock market, and he created this. What this shows is the way a stock price moves. As we know, it doesn't go straight up or straight down. Even in 2017, when the market was on a tear, we did have this type of pattern of going sideways, pushing up, then pulling back, pushing up again, sideways, etc. if you are aware of this and cognizant of this, your timing will be greatly improved. Because when you're buying a stock, you don't want to buy it when it's, for instance, way up here. You want to wait for that that pullback, and stocks inevitably will have a pullback. I mean, they're having a major pullback now, but this is typical of the way a stock price moves. So let's look at a couple of examples of what we call classic bulls, and these are two stocks that I own: Columbia Sports, which I gave you kind of a preview of earlier. And this stock for the last year is up over 43%. I bought this back in September, and I'm going to be pointing out these green triangles along the way where they are featured. These are buy signals. We have 6 pairs of buy and sell signals. These are really helpful, and I'll review them also in the section on timing, when to buy and when to sell, because these are a great aid of timing. I frequently will buy a stock when I see that buy signal triggered, if everything else lines up, which in the case of Columbia, everything did line up in September 28th. So let's look at this chart in a little more detail. Okay, first of all, it's got a rising price trend, which is great. This orange line is a 200-day moving average. These little kind of polka dot lines are, they're called volatility bands. And what those do is they basically chart the movement of a stock and the way it will typically stay within that, within those lines. I'm a sailor, so the way I equate this is staying within the channel, because when you're sailing and you get out of the channel, you're apt to run aground. So I apply the same kind of thinking here. I like to stay in the channel. When a stock will peak up like that, it's often a good time to sell it. If it goes below this orange line or below this bottom dotted line, that's also a good time to say, well, wait a minute, maybe I better sell it because it's going down. The power gauge rating is on the very bottom. It's this straight ribbon here. As you can see for this stock, it turned bullish in September, a little bit of a week or so to neutral, but it's been consistently bullish since and is still bullish today. So, check that off. Power gauge rating bullish. Relative strength has to be strong. That is this next indicator here, relative strength versus the SPI. This is telling you how strong this stock is relative to the SPY. And as we said in the beginning, the S&P 500 is really the benchmark against which we measure ourselves as investors. So if you're buying a stock, you want it to outperform the S&P 500. If it's not outperforming, my sense is you might, excuse me, you might as well just go with the S&P 500 index fund, because if you're not outperforming it, why bother investing in stocks and doing all this research? But the rewards are great if you do the research and buy stocks that not only have a strong power gauge rating but are outperforming the S&P 500. I'll come back to overbought and oversold in a minute. Excuse me. But let me jump up here to money flow. This is the indicator that Mark basically made his reputation on Wall Street. So, excuse me. Wait a sec. Oh, excuse me. So sorry. I think something's going around the office. Okay, back in gear here. So I was talking about the money flow. Mark created this some 30 years ago to measure institutional money that goes in and out of a stock. And you can see by these big chunks of green, that means institutions are buying. When it's red, it means institutions are selling. Now, it's perfectly normal for a stock to have little, weeks here of red intermixed with big chunks of green. That's not a problem. What you want to avoid, though, is when there's big chunks of red, 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 red. You don't want to stock where the institutions are selling. You don't want to buck the trend. The institutions move the prices in the markets because they buy, as we've seen recently, when they sell off these ETFs, it sells off all the individual stocks in those ETFs like it's been doing the last couple of days. And that then triggers another trigger to sell something else because that level falls. So it's kind of a domino effect. And the institutions, well, they've been very dramatic the last couple of days, but even when we don't have the volatility of the last couple of days, they do move the prices typically. And you will see in some of these other charts when all things are equal, and you've got other, say, green, power gauge rating and green relative strength for a period of time, but you have a tip when, say, money flow goes red, that can make that price go sideways. It's very predictive. And so money flow is a huge indicator and something I rely on heavily. That's a classic bull. Strong power gauge rating, strong relative strength, strong money flow, and a rising price trend. So that all lined up, as you can see here back in September when I bought this stock at 61. It's now closing at over 674 today. You can see it's pulled back a little bit, but this gives me confidence not to be concerned because everything's still green. I mean, you look, I took this chart this afternoon. Everything's green. It's lining up. This is not a stock that's breaking down. It's a stock that's in very healthy condition. This gives me confidence to stay with the stock, not let my emotions get in the way by reading the headlines and listening to the news, and just stay the course. And that's actually what I'm doing. All right, let's look at another classic bull, Apollo. This is also a stock that I own. Now, I referenced the fact that I own 8, it's now more like 10 to 15 stocks at any given time. And I keep a list in Chaikin Analytics of those stocks that I buy. I also keep a second list, which I call my watch list. These are stocks that I've gotten ideas about. Either I'm not ready to buy them right now because something isn't lining up, or I don't have the funds to buy it right now. And I put them into a watch list. I scroll through that watch list every morning and every afternoon after the close. And I really just go through the very bullish and the bullish, because if power gauge has dropped to neutral or certainly bearish, it's not typically something I'm interested in buying. Although in the last couple of days, a lot of the bullish ratings have dropped to neutral, but that's just because we've seen such dramatic price action. It's really not a reflection of the health of the stock. But in general, you want to stick with bullish rated power gauge ratings. As you can see here, really since a year, it's pretty much stayed green, just ticked today to neutral. Relative strength is strong, meaning it's outperforming the S&P 500. So we check that off. And there's nice money flow coming in. Not huge, but good enough. And here actually is a good example where you can see where the money flow really kicks in. All else being equal, meaning power gauge rating and relative strength are the same. But when the money kicks in, you can start seeing that price starts to accelerate, as it did in January up to early February. So this stock reported earnings. We have an earnings component, and that's what this little EPS things are here. And since we're in earnings season, I will be pointing those out. But this tells you they beat the last earnings estimate. they disappointed here, they beat here. You can go to a 5-year view up here and see what they did for the last 5 years. But it's really helpful to know going into an earnings report, which was last Thursday for this stock, as you can tell by up here, whether you have confidence that that's going to beat or miss, because there's always a lot of volatility, or typically a lot of volatility around an earnings report. Now you can see here it's green, so they did beat, and you can see up here, it tells you they beat by big time, beat their estimates. And if a company beats their analyst expectations, it can very often pop up, and you can get a really nice pop of anywhere, 15 to 20%. I sold a stock last week that popped 20% on earnings. Crazy. Jout, J-O-U-T. But it's possible. On Friday, in the midst of all that mayhem, the stock was up. I think it closed up 21%. So there are opportunities out there. You just have to know how to look for them. Now, looking at this chart, I'm confident that this stock, even though you can see it's pulling back here, is going to be good for the longer term. I'm not a trader. I'm an investor. I tend to look for a longer horizon than just a day or a week or a month. Although sometimes I see an opportunity and go in and out more quickly, but typically I like to stay with stocks a little bit longer. I think I'm called a swing trader. So I bought this stock back here. Again, I got a buy signal. This was a momentum breakout. And now let me explain this overbought, oversold here, because this is really helpful with timing. So if you refer to this circle down here, you can see that the stock is dipping down. And this really measures that Wyckoff chart pattern of how a stock price moves. So you want to be buying a stock when it dips down, and that correlates with a lower price. You want to be selling it if you're going to be selling it when it dips up, which you can see here mid-September. And look, that correlates with that dip that even went above the volatility band. Unless you're buying something right before earnings, I really urge you to take this into account, and this will be a huge asset to you in helping you with timing. When to get in, when to get out. So we get a lot of happy subscribers. Joe talks to them every day. But Sandy gave us this just, 10 days ago. She said my 401k was up 47% in 2017. I could not have accomplished that without the help of the entire Chaikin team. Sandy's encouraging words, "You can do this, and here is how," was so empowering. My husband has confidence in my judgment. Thank you, Chaikin Analytics, and I feel empowered. Life is good. So you want to be empowered too, and you can do this. So take the little workbook home with you and make your notes, and you can do this. Okay, so in addition to looking for that bullish pattern, you want to buy strong or bullish stocks in strong industry groups. Now, Zacks has basically carved up all of the 5,000 stocks into 64 industry groups and bucketed them so that you see the industry groups are listed here in high-low sequence depending on the percentage of bullish to bearish stocks. That's how we rank stock. That's how we rank the industry groups. And you can see coal, paper, conglomerates, metal, banks. I mean, everyone's been talking a long time about banks and how they're going to profit from the tax advantages, tax overhaul, banks and thrifts, publishing, steel, etc., etc. You can go into our workstation and say you want to invest in banks. You can go through these 34 stocks, but I think that would take quite a bit of time, don't you? So unless you're really keen on a certain industry group, there's an easier way to do it. There's a couple different ways to do it, and I'm going to show you some of those reasons. But this is available to you, which is helpful too, because it really does outline, in high-low sequence, what you want to be looking at in terms of industry groups. And the research has shown that the average stock in a strong industry group is likely to outperform even the strongest stock in a weak industry. So you want to go with the strength in your back. Go with everything in your favor when you're buying a stock. It doesn't make sense not to. Out of 5,000 stocks, there's plenty to buy in strong industry groups. Okay, so one way of finding great stocks is to read Mark's market insights. Now, he sent something out this morning to our members, just giving them guidance as to what this all means, all this volatility in the market, what it means, and what to do now. He sends out what we call Market Insights commentary report every Sunday night to our members, and in that he also goes through where he's seen the week has been, what he anticipates in the week to come, and what you should do now. And included is always a stock of the week. It's the stock that he drills down on in more detail, although he does offer many other stock ideas in the report as well. But this is kind of his gem. This is the one he has a high confidence in. So that's a very easy way to get stock ideas. You can see January 28th, he featured JP Morgan Chase. This past Sunday, he featured Raymond James Financial. The other way you can find stock ideas is to use the screener. And you can see my screener is here. And when you put in you can see the top header says, I've got a navigation bar in the way, but Stock Universe. So for Stock Universe, you can put in strongest industries and it'll only go with the top 20% of industry groups. I mean, how great is that? So rather than go through the top 20% of industry groups slide by slide, chart by chart, looking for stocks that meet my criteria, I can just plug it in here. I'm only going to get the top 20%. So it's all automatically filtered for me. I mean, to take a universe of 5,000 stocks and manage it is a challenge. This overcomes the challenge. This makes finding great stocks easy. And what I do is I have a saved criteria, and you can see it here. Strongest industries, power gauge rating is bullish. We're in earnings season, so I want that earnings surprise factor to be strong or bullish. And remember, I told you earlier when we went over the power gauge rating, I like short interest and insider activity. So I want both of those to be strong. And then the other classic bull pattern is strong money flow, strong relative strength. So I plug those in as strong. And then I hit screen. I couldn't fit it all on this one page, but there's a green button down here. And after a few more sorts, hit screen. So, literally in seconds, I can go from a universe of 5,000, to a very small universe of stocks. Now, I just did this yesterday with that earnings surprise feature because we're in earnings season, and I got this list of 6 stocks. So I've taken universe of 5,000 stocks, and I've gone to 6 in literally seconds. APO and Columbia, top 2, we've already talked about. I own those already. Lazard, I don't own that. So let's take a look at that. Okay. So Lazard is, or has reported February 1st. They had a strong earnings surprise factor, and they beat, as you can see by the green up here around the circle, and also the green on the EPS over here on the far right. So let's look at this chart. Green power gauge ratings since October have been relative strength, outperforming the S&P since mid-November. And the money started coming into this stock at the same time around mid-November. And you can see what happens when these three indicators line up green. The price just takes off. And that's the pattern you want to look for when you're shopping for a stock. Now, in today's environment, pretty much everything's going to be pulling back, as you see here. But as long as all this is green, I say this is a great candidate. Let's just talk to buy. I encourage you to put this on your watch list and see what happens over the next couple of days. Let's see if it's oversold. Okay, that's this overbought, oversold indicator here, and you can see it's dropped down into this 30 range, which means it's very oversold. Well, right now, pretty much everything's oversold because everything's dipped down. For a long time, you probably heard them, the newscasters all saying, everything's overbought. There really wasn't a good time to get into a stock because everything was already, way up at this top. As its top, as you can see here, was exceeding that upper volatility band, and bumping up into all-time highs. So that's not when you want to buy a stock. But you can see now it's pulled back. I mean, you really look at these stocks as being on sale. I'd like to buy clothes on sale or items on sale, any kind of consumer product I like to buy on sale. I'm a good shopper. It's the same thing with stocks. I don't like to pay more than I have to for them. And this is a great opportunity now to make your short list of stocks you want to buy on sale. All right, so I alluded to a short list I had made of stocks that I'm watching to buy on these pullbacks that we're experiencing since Friday. So you might want to follow these stocks yourself. I took this chart slide here. I captured the data yesterday towards the end of the day. So you can see these are all very bullish stocks, but they were down 6, 5, the lowest one was down 2%. I mean, these are great. These stocks are on sale. Everything else meets my criteria. Those factors that I focus on are all bullish. The criteria is all bullish. This is kind of my short list for what I'm buying. I actually, Lazard, we just talked about, and AbbVie is a healthcare stock that I actually bought this morning. So let's look at AbbVie for today. All right, here's my short watch list over here. I drilled down on AbbVie, and what I did this morning is on each of these 6 stocks, I put in a really low limit order because they were projecting the opening to be way down. So I put some really low prices in. What Mark says, with all this volatility, you want to put a limit order in so that you're not surprised, because there's so much volume and volatility that you may not get your price, and it could be a lot lower than you anticipated. So he says put a limit order in and don't use round numbers. So I put a limit order in for AbbVie for $102.10. And it opened way down and immediately hit the $102 and closed tonight at 111. I took this slide at about 1 o'clock when it was up at 109. So it's such a crazy volatility day that a half an hour after it executed, it was up to 109, which is when I took it here. And then it actually closed at 111. So that's what I'm talking about. You know, get your short list, identify which stocks you want to buy. You know, I have these 6, now I have 5, and put in these limit orders. You know, what's the highest price you're willing to pay for this, given the current environment? And you can't watch this all day long because the automatic, trading accounts are all triggering buys and sells right and left. So this way you don't have to watch it. You just say, this is the price I'm willing to pay for it. When it hits this, I'll buy it. And it does that for you. So, that's what I encourage you to do as well. So time, I've alluded to the fact that none of us have enough time to do what we'd like to do. And one of our subscribers here gave us this actually even before we had the screener. Okay, let's talk about timing. That's usually everyone's biggest challenge. And maybe you can put into your Q&A box, if you will, if timing is a big concern, a challenge for you. And that'll help me know how much time to spend on this. Sam says timing is key. It is key, Sam. Greg says always. Thomas says yes, timing is issue. I think we can all agree. Connie asks, when do you get out or sell? We're going to be talking about that. I've got sell rules. And Chuck says the hardest element is the sell timing. So yes, we're all in consensus that timing is key. And let's go through some guidelines so we can make it easier for you. Okay, so when to buy. Buying is always easier than selling, and I'm a good shopper, so I like to buy. Buy signals, I've been pointing them out along the way on the stocks examples. We have 6 pairs, and when you become a member, and Joe takes you through what we call an onboarding session where we walk you through the platform and how to use it, he will identify how you get to these signals, how you overlay them on your stock list, and how you use them. The other indicator that we've been pointing out and talking about is the oversold indicator. That's that kind of pattern of the Wyckoff chart. So kind of the buy rules, if you will, for me are when I get a buy signal, when a stock is oversold. For me, oversold means it needs to be dipping down, not up. I need to move that little magnifying glass. And it has to follow that classic bull pattern. Strong money flow, strong relative strength, strong power gauge rating. So how do you find stocks that meet that criteria? Well, we have what we call an alerts view that you can overlay on any list. And part of my 10 or 15 minute routine every day is to overlay the alerts view in the morning on my stock list, as well as on my watch list. And now, since I created this short list, I overlay it on the short list as well. So I've given you a screenshot of yesterday's alerts view of my short list. So it's showing that I've got 2 buy signals on Raymond James, and I've got a momentum breakout buy on AbbVie, the stock that I bought this morning. It's also telling me that an estimate revision was raised for AbbVie, which is another alert that I like to know about because the analysts are very influential in moving stock prices. When they raise an estimate revision, you often see, if it's a prominent bank, you often see a spike in price, and the reverse if they lower an estimate. So here's my short watch list again here on the right, and I overlaid that alerts view. And this is how the panel actually looks, but it also gives me this little triangle here on the index. So I know there is a buy signal for that stock. So let's look at Raymond James. This is, I don't own this stock. This is on my watch list. But here's the two buy signals that were issued, triggered rather Monday. The was an oversold buy, and I think it was a momentum breakout. Oh, money flow, sorry. Money flow and oversold buy. So oversold's telling me it's dipping down, which I can see it is here, definitely. And everything else is green. So this is a great candidate to buy. This chart I took on Monday so that you could see the minus 5%. It was down 5% on Monday, but it was up 1% today. It closed at 91. Or up 2% today. Sorry, it closed at 91. So this is still on my list. You know, this is a great candidate for a stock if I can get it at a good sale price. All right, when to sell? This is the hardest thing, right? There's two scenarios when you sell. You're going to take a profit or you're going to sense that a stock is breaking down. And taking the profit, what are the guidelines for that? Well, when that price hits the upper volatility band, that's that polka dot, I call it the channel market. When it goes outside that channel market marker, it's apt not to stay there. It's apt to, you know, go up there but then pull back. So that's a great time to take your profit because it could be an all-time high. Certainly you want to buy it or sell it when it's overbought. So instead of dipping down, you want that indicator to be peaking up, correlating to, you know, a peak in price. And after earnings, you know, we've talked about earnings, and there can be high volatility around earnings report. If they beat, you might get a nice spike like this. Great opportunity to take your profit, say thanks very much, and get out, because most likely, as you see here, the stock will fall back once it's out of the news. So here's a couple of examples of when I've sold. Senta Garden and Pet, this is a small cap stock, probably one you've never heard of, but look at the activity on this. It's pretty wild, isn't it? So I had this on my watch list. I bought this stock back in September. It was at this buy signal here in September is when I bought this. It was a relative strength breakout, telling me that the relative strength was kicking in. Power gauge was already green, and look at the money coming in, and look at what happens as that money escalates. So does the price. That's how predictive the money flow is. It's just an incredible barometer of where a stock is headed. So I bought this on this buy signal here, and then after they reported earnings, look what happened. They kind of meet estimates, and it dropped way down. It dropped like 10% down. However, I did not panic because everything was green. Power gauge was green, relative strength was green, money flow was green. So I had confidence as the stock was going to come back, and a few days later it did. Spiked up way above its upper volatility band. So I said, this is great. It's at 40. I'm going to take my profit and get out, which is exactly what I did. So in 10 weeks, I made a 14% profit from here to here. And now I'm out of the stock, and now it's at 35, and I sold it at 40. So, you know, that's why it's so helpful having these guidelines, because they take the emotion out of should I or shouldn't I? Can I eke out a little more profit? Well, no, you know, I mean, you do have to have some judgment in here, but it really can help you with these guidelines. And again, they're in the workbook. Oh, there's my buy arrow. And here, as you can see, when it spiked up, it also was oversold, which is great. It's that Wyckoff chart of peaking up, getting the maximum out of it. Let's look at another example, LPL Financial. Now, this is one I only had for, gosh, a few days. No, I guess it was 2 weeks, LPL. But I bought this stock here at the yellow arrow right before they were reporting. They were on my watch list. they were on a screener. And from the screener, I put it on my watch list back in late September. And then I bought it January 19th at like 58, which is right in here. And I bought it because it had this pullback, and I knew they were reporting earnings. And look at the history of earnings and look at the history of the price trend. It all looked pretty good that they were going to beat earnings and spike up, and that's exactly what they did 2 weeks later. Also, the earnings factor was the earnings surprise factor was very, very bullish, as was the whole earnings component. So, again, I look at those earnings drill down when we're in earnings season. So I sold it for 9% profit in 2 weeks. And you can see today it's almost at 63, and I sold it at 65 for a nice profit. But I mean, this is still a strong stock. I mean, look, everything's strong here. A little bit of money going out of it, but I still have this back on my watch list, for instance. Not on my short list, but it's on my watch list because it's still a strong candidate for a stock to buy. Okay, the breakdown. This is the thing you really want to avoid. You don't want to watch and go through the pain of a stock breaking down. And these are the guidelines that I have in place for that. Power gauge turns neutral and another indicator turns negative. Now you have to use a little bit of judgment in this environment because a lot of the power gauges are turning neutral just because the whole market has dropped. It doesn't mean there's any problem with the stock at all. It just means it's those automated trading algorithms that are triggering and kind of dominoing, and there's a lot of selling going on that is not based on fact. It's based on fear and algorithms. But if you've got a lot of other negative indicators like relative strength and money flow, then you take a closer look and think, maybe I should be out of this stock. It's not a healthy outlook. Certainly, if you get a sell signal, that's a strong call to action. And if the price drops below that orange line, the 200-day moving average, or that lower volatility band, that dotted line, that's a good place to consider getting out as well. So this is still really the only example I have of getting out before a breakdown. I'm usually out to take the profit well ahead of a stock breaking down. So I use this going back to 2016 and 17 because it's really the best and the only example I have of a breakdown. All right, so I bought this stock back here in, I think it was November or December of 2016. I bought it at 16. And there was a momentum buy signal. It's not on here, but there was a momentum buy triangle, and it also was oversold, as you can see down here, dipping down, and everything was great. Strong money flow, strong relative strength, strong power gauge rating, and strong industry group, insurance, very strong all year long. And then, as you can see, the price went along, and then it popped way up to its upper volatility band in February. And I was looking at, as I was going through my charts every day, I looked at it, and you could see that the money flow was just starting to turn negative, and it was oversold, and it was at the upper volatility band. So I said, wow, this might be a great place to take my profit. So I did. I sold it at 19. At an all-time high, and then 2 days later they pre-reported their earnings, which is really odd. I didn't know companies did that, but they pre-reported. The stock dropped 10%, and then like 2 weeks later they reported, and the stock dropped another 6% overnight, and then just a total disaster, down. But this only goes to July, but the price on this stock today is $6.90. I mean, imagine holding the stock or buying a stock at 16, where you could have sold it at 19, but you're holding it at 7. I mean, that's painful. So following these guidelines can really help you avoid a lot of trouble. And you can see what happened. Everything kind of cascaded down to red and yellow, and the price went, in sequence all the way down there. So another testimonial from Norm here, whose account stands in excess of $1 million. Before Chaikin, I would make money and then lose it. Consistent earnings were just not a reality for me. Chaikin has changed all that. I can't thank you enough for your tremendous service and excellent methodologies. So, these are the methodologies you too can follow so that you have consistent wins, not inconsistent losses. All right, let's avoid the pitfalls. And it's basically the reverse scenario of a classic bull, what we call a classic bear. Let's look at a couple of examples. But Warren Buffett says you want to avoid risk wherever you can, and certainly that's no truer than in today's environment. Let's look at a couple of examples. Avalon Bay. I mean, by now your eyes are getting used to looking at these charts. You should be able to see this in seconds and realize this is not a stock you want to own, or if you do want to own it, buy put options and make some money on the way down. But I mean, things have been red since August. Everything kicked in August. And look at these sell signals you got, these red triangles on the way down. One right before they reported earnings on January 31st, where it dropped down again. And I mean, these are the type of stocks that can really destroy your portfolio performance, especially in today's environment. These are the stocks you want to be out of. Now, Under Armour, I'm taking you back to 2016 because in August, that's when you can see the power gauge turned bearish, a little bit neutral, but has been bearish ever since August of 2016, way up here at 44. And look at the decline with the sell signals as well, helping you get out. But look at what happens when they report earnings. It just drops. This was an earnings drop as well. These can be great opportunities for earnings. And Joe and his colleagues in customer success actually give presentations to our members every week on how to use the earnings overlay we have in Chaikin to make money on the downside in a stock like this. This is today's stock. Hasn't gotten any better. You can still see it just going down, 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 more sell signals. And when we looked at it back in August of 2016, when the power gauge turned bearish, it was 44. It's now 13. That's just would be criminal to hold this stock going the way down. You can buy their apparel, but don't buy the stock. All right, a lot of our members do trade options. And Mark here says he had a 90% average return in his first 6 earnings trade using options play. That's the integrated options overlay with Chaikin Analytics. And the earnings features, all very simple trades. Chaikin makes the process fast and efficient. So instead of getting bogged down in due diligence, I was trading. And as I say, Joe and his colleagues will walk you through how to maximize, the options opportunities in Chaikin. All right, so let's quickly recap. There are 5 steps to find winning stocks, even in today's environment. You want to make your list, particularly because they're on sale. There's still some great stocks out there. You can find them utilizing these 5 steps. Tools you trust, that's the Chaikin Power Gauge rating. Based on, the whole centerpiece of our platform is the Power Gauge rating. What to buy, that's the classic bull. You want to buy strong stocks and strong industry groups. Make your life easy by using the screener to screen for those. And timing, everyone's biggest challenge, when to get in, when to get out. I hope those guidelines I outlined can help you with your buying decisions and selling decisions, and how to avoid those pitfalls, those classic bears, how to see that setup before it tanks. So I made a promise to you in the beginning that you would discover 5 steps to find winning stocks quickly and easily. So you can make some money even in today's market, or especially in today's market where there's such high volatility. And not only put some money towards your retirement, but also take some great vacations along the way. So the platform I've shown you, as I said, was on Chaikin Analytics. We actually got an award, a financial technology award this year from, or in May, I should say May of 2017, from Benziga for the best stock idea platform. And another happy subscriber, Ken, has gone from 235,000 to 1.2 million in 7 months. And he says he wouldn't have been able to achieve this without your system. The system comes with the Chaikin Power Gauge rating, the 20-factor model, stock discovery, which we didn't get into, but which you will on your quote onboarding, which you can be on as early as tomorrow, so you know how to set up and use all of the functionality of the platform. The screener, we talked about the screener. I referenced the options play, which is this the graphic here on the right. It gives you the best kind of risk reward options for an options trade, doing a lot of that due diligence for you. And we're going with a different, a unique offer this time around, offering a quarterly, because we really want you to get started. We want to make this as easy as possible for you to get started with Chaikin. And if you come in on a quarterly subscription, that will give you enough time to get familiar with the platform, use it, make money, and then you'll want to extend that into an annual. And you'll be able to more than afford it with the profits that you've already made from your quarterly membership. So we usually sell a 3 months quarterly subscription for $600. We're taking $100 off, which is valid through Friday. But stay with me, and we're going to make a little bit sweeter deal. One last testimonial from Marie here. Says, never in a million years. She's a relative novice to the stock world. However, I was able to exceed my expectations of return during my first year. After watching Sandy's 5-step method several times, I felt that I could learn this procedure. Thanks to Chaikin, I absolutely love delving into the market. So I can identify with Marie because I was terrified of stocks. I always thought it was way too complicated. I could never do it myself. I needed to pay someone to do it for me, and I just felt it was way above my head, which it's not. If you have the tools that we've been going through with you, and everything I use is on this one platform. I don't go off this platform for anything. You can do this. This is very achievable. So Marie says, never in a million years did I think the stock market would become my passion in retirement. Chaikin made that happen. So you can do this too. More free bonuses that we add to the membership. The one-day chart, which we showed you when Mark showed you that today's chart of the S&P 500. You could see the movement by the minute of the price. The earnings. You can drop down. I didn't do the drop down, but you can see what they've reported on on their past earnings. And this is the market insights, the weekly commentary that Mark puts out with his stock of the week, which have been Raymond James recently and JP Morgan. And then I always point this out because I think this is really one of our best benefits as a subscriber. You get small group tutorials to help you set up and use all the features. So as early as tomorrow, when you subscribe by tonight, you will be invited to go to a session, and Joe or his colleagues will walk you through how to use all of the features. Now, this is unlimited, and it's also unlimited one-on-one. So if you have a particular trading style and feel you need a little more guidance, you just set up a one-on-one phone session with one of our customer service representatives, and they will walk you through how to best utilize Chaikin to fit in with your trading style. Our mission is to make you successful, and that's what customer success is all about. I mean, their whole role and raison d'etre is to make you successful investors. And I said I'd sweeten the pot a little bit. We're going to take an extra $100 off when you subscribe by midnight tonight. So for $399, you can get in and get a quarterly subscription to Chaikin Analytics and be up and running as early as tomorrow, making that short stock list for yourself so you can get in on some of these bargain prices while they last. So thank you all. This has been a great session. I appreciate your staying with us a little over time, and I hope you felt the benefit of Mark as I did, of him giving us that overview in the beginning of what's happening in the market and what to expect. All right, Joe, I'm going to turn it back to you. And thank you all, and good night.
All right. Thank you very much, Sandy. And big thanks to Mark as well for the overview. Again, Sandy's offer is a great offer for a quarterly subscription. It's a great way to get in the door and see what the program is all about. That's $399 for 3 months. This is complete membership too, keep in mind. So this will include all access to our support webinars, which take place every single day. We have multiple sessions taking place on just about every day during the week, as well as the newsletters too. The most important one that we want you to get on is our onboard session. This is where we're going to show you all of the ins and outs of the program, how to find ideas. There were questions about how Sandy, during this webinar, how Sandy found the stocks that she used. Well, through a variety of methods, but we cover all of that on an onboard session. So that'll be taking place tomorrow at 2 o'clock Eastern time. We have recordings of all the webinars that we do. So regardless of where you are, what your day looks like, we'll have all that content recorded and available for you. So with all of that in mind, make sure to give us a call, 877-978-6257, or you can go right to our website, chaikinanalytics.com/Sandy. You can see the offer link that I chatted out to everybody into the Q&A window. So feel free to take advantage of that. In the meantime, have a wonderful evening, and we will see you on tomorrow's onboard session.